morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, October 24th. Mostly higher trade here in the agricultural space overnight, led by strength in bean oil. Soybean oil prices are drawing support from higher energy prices along with higher palm oil prices, which have reached a new two-year high on tightening global inventories. At the moment, corn is up 2 to 3 cents near session highs. Bean prices has just poked in a new highs, up 8 to 9 cents. Meal is up 1 to 2, while bean oil, like I mentioned, is up 60 points. Most mixed, slightly lower trade here in the wheat now, with all three classes looking 1 to 2 cents lower. Export sales later this morning expected to be huge, particularly for corn, given the large amount of announced sales last week. Bean sales also expected to be quite strong, despite a lot of sales by Brazil to China for Q1 and Q2 of next year. This surrounding uncertainty over the U.S. presidential election. Outside of a few passing showers across the central portions of the Midwest, over the next 24 to 36 hours, harvest conditions remain rather favorable. Much above normal temperatures are expected to extend into early parts of November. However, some much needed rains are forecast once we get into week 2 of the outlook. We'll also get an updated U.S. drought monitor later this morning, which has shown a significant expansion of drought readings in recent weeks. South American weather remains mostly favorable, a good mix of rain and sunshine over the next few weeks, and Brazil should keep the outlook for planting progress and crop development favorable. And in Argentina, recent heavy rains across key growing areas in the central part of the country were deemed a game changer by the Rosario Grain Exchange in helping improve both corn and wheat crop prospects. In Australia, the USDA FAS office is forecasting wheat production there at only 28.5 million metric tons. That's well below the official USDA estimate at 32 million metric tons. And in Ukraine, despite over 2.5 years of war, grain shipments there since July for the 24-25 marketing year have reached 13.3 million metric tons. That's well above the 8.3 million metric tons at this point a year ago. Wheat shipments are up 77% year over year, while corn shipments at nearly 4 million metric tons are up 17%. Seen a new high here overnight in D's 24 corn. It's the 6th consecutive session of a higher high. Not a whole lot of resistance on the charts now until we get to the October high, which is at 434.25. Nove beans back above the $10 level. However, currently flirting with its 50-day moving average resistance, which is at 10.06. After reaching a fresh 2-week high overnight, December bean oil has pulled back to the 44-cent level. In wheat, we're seeing inside trade here overnight for all the D's 24 contracts, all three classes. Both Chicago and Kansas City appear to be stuck between their 50 and 100-day moving averages. And spreads just continue to firm for both corn and soybeans as flat prices, I think, may find it difficult to extend recent gains much more given a favorable weather outlook both here and in South America. So I think these firmer spreads are needed to help entice U.S. farmers from selling some of their recently harvested crops just to keep the strong demand pipeline full. So export sales here in a little bit, and I appreciate you listening. I hope you all have a wonderful day.